instead we've said, look, let's refocus this organization. And our strategy is going to be driven around three key elements. First, we're going to maximize the EBITDA opportunity. We're going to focus on the bottom line. We're going to focus on making money to the benefit of our shareholders. Q1 was a huge milestone. First quarter of positive EBITDA in the company's history. From my perspective, that's now setting a trend and giving me a goal to beat every quarter. We're not looking back. We're building upon that. We're going to be successful each and every quarter because we're going to make sure that we're focused on becoming as profitable as we can be. That's not just through cutting expenses. You can cut expenses where they're not appropriate to make sure you've right-sized the business, but you can't save yourself to prosperity. We've got to make sure we've got the right expense load, but our focus is on improving profitability through growing the top line, because that flows to the bottom line. The old adage that I used to hear in the retail industry was, you can cut expenses till the last dollar of sales you get is profitable.
Steve Goertz, how's it going, man? I appreciate you joining. I'm very excited. You are with Acreage Holdings, and this is actually the real estate podcast. We're here in Austin, Texas, but we love talking business, cannabis, and just getting out there and getting general advice for our listeners, for ourselves. And I am sure you're a busy man. Looks like you're living it up on your, you said you're out enjoying where you're staying for the weekend, getting some break, but I'm sure you're working when you need to. So I appreciate you coming on, man. And we're excited. Today's Friday. And if it's cool with you, would absolutely love to kind of get to know you a little bit better as far as your background and how you got to where you're at today. And then dive in and talk a little bit about Acreage and, all the exciting things that you have going on with the company.
No, great to be here. Thanks for the invite. I appreciate any time I get to be able to tell the Acreage story, because I think it's unique in the industry and one that, is exciting right now. So again, thanks for the invite.
Yeah. And you guys are relatively new to this specific company. I know not to the industry. What's exciting for me is, and we talked about this a little bit, like Acreage is making a little bit more of a push to get themselves out there, to tell the story, let people know you guys as far as social media goes. And I haven't seen any podcasts or interviews with you about Acreage at all. I don't know if you've done them or not. I'm sure you have with other people like analysts and stuff like that, but it's very cool for me to dive in and let people know who you are, because there's been this perception of Acreage in the past, and people are like, yeah, they've done all this stuff. And I'm like, yeah, things have happened and the business is what it is, but there seems to be a new team and a new direction. So we'll get into that. But if you don't mind, man, can you kind of talk about, as detailed or as quick as you want, just a little bit about kind of where you're from, your background, what you did, growing up to get to where you're at this point in business. And we'll just go from there if that's cool.
Sure. No, I'll be happy to talk a little bit about my background. It actually fills in the story with my participation at Acreage pretty well. So as you can tell from the accent, I'm a Canadian. While I like basketball, football, hockey's my sport. Unfortunately, my Leafs just got bounced from the playoffs. So, I'll have to cheer for somebody else for a while. But being Canadian allows me a little bit different perspective, a little bit more broad view. Because we're always from the outside looking in into what's going on in the big market in the US, and we always try to follow what's going on there. But I grew up in Canada, in a small town on the border. So, within half a mile of me, I could see Port Huron, Michigan. So we always had a bit of a international perspective there. When I was growing up, it was, like anybody else, focused on school, focused on sports, focused on social and hanging out with my friends. Quickly realized, though, as I was going through university, I wanted to take a business bend. So I got a background in a little bit of mathematics, but in accounting. And that allowed me to pursue a CPA designation. So going back more years than I care to tell, I'm a CPA that worked for Deloitte's. both in Canada and New Zealand, because it gave me an opportunity to do an international trip. But I didn't spend long in public accounting after I got my designation. I've had a number of different stints that surprisingly set me up very well for this position at Acreage. It's almost like all of my job histories led to this point in time. So if I go through them quickly, I spent a few years at a food processor involved in their agribusiness side, so growing crops and growing animals, and then processing those products for sale to consumers, which lends itself very much to the cultivation side of cannabis. From there, I jumped into retail. I led the finance team for a large national grocery chain, where we were satisfying our customers through multiple retail locations operating under different branders. Again, in my role today, we've got a significant retail component, so that gave me an expertise in those areas. From there, I left and did something completely different. I joined a public company as their CFO and helped transform that business from a retailer to a financial services organization. So through that role as a public company, I helped to build what has now become Canada's largest non-bank, non-mortgage lender, offering direct loans to consumers that didn't qualify for bank loans and didn't want to pay for the high cost of payday loans or products like that. But we grew that in a public capacity, which allowed me to grow a business in a highly regulated market that was changing very quickly, as well as building a capital profile for an industry that wasn't well understood by the capital markets. Again, a lot of requirements for that in the cannabis space because, as you know, we're an industry that's going through a lot of regulatory changes, and a lot of investors really don't understand what's going on with the space, so there's a story that has to be told. From there, I left and tried, a couple different things to fill my time. I helped a private equity firm transition a marketing services organization into more of a global player. But most recently and most relevant, I worked with a SPAC, a Special Purpose Acquisition Corporation, to try and build a global cannabis company. So through that SPAC, we raised a significant amount of funds on the Toronto Stock Exchange with the mandate to acquire and build a global cannabis company through acquisitions. So that allowed me to explore this space, talk to most of the Canadian licensed producers, talk to many of the US CBD companies. We couldn't deal with the US MSOs, the directly plant touching, for regulatory reasons, and then talked a lot to the European players. So I got to know the space, got to know the strategy, got to know the pitfalls in an enviable way because I didn't have to spend my time on the day-to-day operations of a business. You could focus on the strategy side of it first. Ultimately, that Special Purpose Acquisition Corporation went in a different direction. It merged with a winery, and that transaction just closed this week. So it's now a publicly traded wine company. But through that, I got to know and work with an interesting character called Peter Caldini, who was my partner at the SPAC. He was the CEO. I was going to become the CFO. When the SPAC changed directions, Pete joined Acreage. And shortly thereafter, I joined him as well because we think the two of us work very well together. We complement each other's skill sets. And we see a tremendous opportunity in this organization that we think can turn it around. So that's a long way of saying I've had a bit of a varied background, but many of the roles, surprisingly, have positioned me extremely well for this role I'm in today.
That's great, man. And I've talked to CEO a little bit myself, and say that I think about my partner because we're doing real estate and we're very different and we complement each other well also. And it's amazing. Like, it's like the two of us equal, a greater sum that we can go and benefit all of our businesses that we do. Cause we do construction, property management, wholesale and real estate. And like, he's an operations guy. I'm kind of more of the growth, bring all this stuff in and it works well. So when you said that, I thought about that, and I would imagine there's probably different skill sets that you and Peter have because you guys, most likely wouldn't make sense if you both did the same thing, right?
And that's really important in any business setting. You want people with different perspectives, different skill sets that complement each other.
Yeah.
Obviously, there's got to be a strong chemistry and a working relationship because, we work very closely together. But Pete's an extremely strong marketer, extremely strong operator, which isn't my skill set, my background. Mine's more on the regulatory, the financial, the administrative side. So that allows us to work closely together, but complement each other's abilities.
Cool. So we got the power team coming over to join Acreage.
Yeah.
I'm curious, obviously there's the big deal with Canopy, right? Where there's the strike price on the acquisition for some of the shares, and then the, a little bit more of an opportunity for the other ones. How do you guys view that? Like when you guys were coming to join the company, obviously that's a big thing. Like that seems to be the milestone to achieve. It's very interesting because there's not, a lot of companies that do stuff like this. And I thought it was super creative. I personally learned a lot through that transaction about like having options to buy and strike price, and literally have tried to implement that on real estate deals. This is fascinating for me. But when you were joining the team or considering joining, I'm just curious your thought process on like, hey, this is the goal. This is our goal, is to get this company to merge with Canopy. And then we've successfully done our job, or just kind of how you viewed that when analyzing it and joining the team.
I think, there's really three components that I would have looked at, and Peter did as well. The first is, yes, there's a strong relationship with Canopy. And Canopy's, the world's largest cannabis company, has significant experience, significant resources, has built up a lot of intellectual property and brands. And because of the relationship with Acreage, we're able to build upon that and use that and leverage that to our success. Ultimately, there will be a transaction where the entities are combined. So that presents, some interesting exit points for everybody, but more importantly, some interesting points for partnerships along the way to build a better organization. So the Canopy relationship was important and interesting. More important though was Acreage itself. It's a company, if you look back, that was one of the early MSOs, one of the early companies to go public, and had an initial run where it was very successful. For a number of reasons over a period of time, it probably didn't perform as expected, and its results were a bit disappointing. And we all know last year was a difficult year for the company, but they weathered through that, and they survived the storm, if you will. And while they were going through that difficult time, they did some great things. They invested in assets, they invested in markets that long-term they believed would pay off for them. So as I looked at Acreage relative to a lot of the other players in the space, Acreage had gone through some troubled times, but they were extremely well positioned for great success moving forward, given the assets they had in place, the markets that they were in, and the state of where those markets were going to move to. So there was an appeal to Acreage, forget about the Canopy side, just because it's a business that was poised for great success. So that was the second reason. The third reason was, working with Peter and working with a good team that was in place in Acreage, from the operations team to the cultivators to the board, a lot of good, bright people. And business is all about people. You work hard with the people that you're engaged with. You leverage their strengths, you leverage their abilities. And I saw a lot of latent talent within Acreage that just had to be, let loose and deployed. And if we could do that properly as leaders, the organization was going to succeed. So the people that were here were also another big selling point for me, because, I thought I could come in and help lead it. I could enjoy working with the people I work with. I could learn, and I could have some fun. So, things lined up for me, and Acreage was a tremendous opportunity, and I was happy to jump at the chance.
Man, that's exciting and a cool way to put it. And I'm glad you touched on all that, because, it was a troubling year, and it was for everyone. But Acreage, had a lot of changes that have taken place. And from my perspective, they were obviously one of the early ones, but they just had a plan and a vision, and getting in all these states and having this massive land grab, and nobody can predict, how things are going to play out in this industry, and, how fast things are going to move. And, if things would have maybe moved faster on a regulatory standpoint, maybe that would have been the perfect strategy. but they didn't.
Yep.
And so you got to adapt. And, I weathered that storm with you guys. I kept buying shares, and it was really dark at one point. I'm like, what is going on? Like, the conversion ratio it wasn't even showing up anymore of like what price it would convert. I'm like, golly. But then, which was the greatest thing ever, last quarter, you guys showed profitability, which was a massive deal. And from my understanding, that's the plan, to keep that moving forward and to keep building on that. And there seems to me, and I'm a risk taker, but there seems to be a appeal that Acreage has in the market that hasn't caught up with what's actually going on in the company. And people have written it off, really have. And not everyone, but, people that I'm seeing on social media and stuff are like, oh, Acreage is, they're horrible, blah, blah, blah. But it's different. It's not even the same, that you've literally changed directions, sold off certain assets, sold off certain states. I was extremely excited about the deal in Florida because my understanding and perspective is you guys probably got twice as much as you would have even thought you would have got for that deal, which that's a game changer in and of itself.
No, it's interesting because, those troubled situations, and Acreage was a troubled situation, but that creates opportunities. If you manage your way out of it properly, that's where the excitement is. That's where the opportunity to expand and grow is. And that's where the opportunity is to increase the value of the organization for the benefit of the employees and the shareholders. And that's what I saw at Acreage. They started out early. Their strategy was plant the flag in multiple markets, which at that time likely made sense because no one knew how this market was going to play out, what states were going to become legalized, how that was going to work on a federal level, and where you might be successful. Unfortunately, the pace of change and the pace of rollout of legalization of cannabis probably occurred in a different fashion. And so planting the flag quickly in a number of markets may not have been the optimal solution. Other companies, focused on one state as a core and then built up from there. And time has proven them to be quite successful. So while Acreage was busy planting the flag, other organizations were focused on solidifying the presence in one or two key markets. So as Pete, prior to Pete and I coming in, but amplified by Pete and I coming in, we've refocused the organization. We don't want to be everything to everyone in every market because that's too broad. We're not focused on the right things. Instead, we've said, look, let's refocus this organization. And our strategy is going to be driven around three key elements. First, we're going to maximize the EBITDA opportunity. We're going to focus on the bottom line. We're going to focus on making money to the benefit of our shareholders. Q1 was a huge milestone. First quarter of positive EBITDA in the company's history. From my perspective, that's now setting a trend and giving me a goal to beat every quarter. We're not looking back. We're building upon that. We're going to be successful each and every quarter because we're going to make sure that we're focused on becoming as profitable as we can be. That's not just through cutting expenses. You can cut expenses where they're not appropriate to make sure you've right-sized the business, but you can't save yourself to prosperity. We've got to make sure we've got the right expense load, but our focus is on improving profitability through growing the top line because that flows to the bottom line. The old adage that I used to hear in the retail industry was, you can cut expenses till the last dollar of sales you get is profitable, but you're only going to get that $1 in sales. We don't want to do that. We want to right-size the business, have the right level expenditures, but focus on growing that top line because that's going to add value and that's going to create momentum. So that's the first. Second priority is fix the balance sheet, strengthen it, clean up some of the historic debt instruments that the prior management team entered into, not because they wanted to, but because they didn't have a lot of options available to them.
Yep.
So I give them full credit for doing what was necessary to keep the company going, to get enough cash for the company to do the build outs that they did. But now we're in a position that we can clean up the balance sheet somewhat. We've got lower cost of capital. The markets are more open to cannabis companies. So there's a lot of opportunity to improve the balance sheet, both by cleaning up, the elements that we have there today, and then adding to it by putting cash on the balance sheet that makes us more open to do more, whether that's acquisitions, if they make sense at the right price, or continue acceleration of our capital plan to get an even better presence in markets where we think we can succeed. As an example of that, I look at New Jersey. You know, we've got an enviable position in New Jersey where we've got three dispensaries, which is the most allowed, and we've got one operational cultivation facility and the ability to build out and open a second one. So we are aggressively expanding our cultivation capacity now because New Jersey is going adult recreational use at the end of this year and early next year. And if we can accelerate our plan, we're in a great position to capitalize on that market when it becomes available. So getting the balance sheet right so we can do those things is important for the organization. So that's the second strategic element. The last one is really simple. We don't want to be everything to everyone. We're going to focus our operations on achieving the best possible results in our core markets. We've said now, our core markets are really going to be a number of key states. And it's the US Northeast, North Central. So Illinois, Ohio, Pennsylvania, New York, New Jersey, Massachusetts, Maine, Connecticut, and to a lesser extent, New Hampshire. It's only 9 states. But in those 9 states, there's a large portion of the US population. A lot of those markets are either adult recreational use or are moving to adult recreational use in the near future. And we've got a significant collection of assets and presence in all of those markets. It's markets where, in many cases, we can win and be the leading player. Or, you know, if those markets are more well-established, like Illinois or Massachusetts, we've got enough of a presence, we can be a very successful and profitable operator in those states. So that's where we're going to spend our time and attention. We're not going to plant the flag in New Mexico or West Virginia, even though they just went adult recreation. You know, that's not our strategy. We're not going to go to those. We're going to fix what we've got first. That doesn't mean we're going to shy away from new opportunities in the market. We still have a presence in California, and that's where we're going to launch a beverage product. We're doing that because we want to test and learn. We think beverages and edibles are going to be an important component of the industry. California leads the industry in innovation. So we need to be present in there, not from a growth perspective, but from a strategy perspective to understand what's going on so we can apply that to our other markets. But the focus is really, it's our core states. It's building out what we've got and getting the market opportunity that's available to us. And that's a little bit different than the past. But we think that focused strategy, if we can get the entire organization focused on it, will lead us to tremendous success, to growth, and to profitability for everybody.
I love it, man. Thanks for sharing.
Yeah.
And that's kind of a little bit on what I was thinking as far as the appeal of the company to everyone else is like, I don't think people understand what's actually happening moving forward. And so with that alone, it seems like the price, you know, to me, there's that risk reward component that I see, in my opinion, to be better than any of the cannabis companies out there, because there's obviously a lot of good ones, but they're valued pretty high. I mean, I think they're going to keep growing, but everyone knows what Curaleaf's going to do or whoever, but nobody knows, or some people know, but not a lot of people know like what's happening within Acreage, and therefore the price isn't matching up with what's actually happening or going to be happening, in my opinion. Yep. And so, you know, I follow all these companies. I think they're all going to do well, but from my perspective, Acreage has the most potential.
Yeah, and I completely agree. If I look back at my career, the most excitement, the most fun, and the most success I've ever had was turning around a public company. When I joined this entity, the share price was just below $9. As we were going through the transition, some difficult times, it bottomed out at $6. Today, it's at $152. Mm-hmm. So, you know, that was a great experience, a wonderful ride, and we had a lot of success. But it was, you know, it was stimulating, it was challenging. I learned a lot. I want to do that again.
Yeah.
And I see that opportunity here at Acreage.
Yeah. And that's, you know, for me, whatever reason, like I like putting myself in those positions. I don't like going with the crowd. I'd rather be where everyone says we can't do something and put that challenge and stress on myself to go solve it and win and figure it out. And I wouldn't want it any other way. Like, I don't want to, you know, go with the big, obvious, easy choice and get the slow, steady growth.
No, I agree. And I think, I joined Acreage for those reasons. I think, like I said, collection of assets, the people involved, the relationship with Canopy gives it a unique place in the marketplace that I'm not sure people understand yet because we haven't been out there telling the story. Pete and I are now settled in. We're now comfortable in what the strategy is. We've had some good financial results. So it's time for us to start telling the story to people understand, because it's not the same Acreage it was a year ago.
Yeah.
We're leaner, we're better, we're more focused. And I'm not taking credit for that. The management team that was here before me, they did a lot of that heavy lifting. We're just here to shepherd it to the next level.
Yeah, man, I'm excited. I'm one of the biggest supporters. I got a lot of my money in Acreage, and when I post on Twitter or whatever, like everyone knocks me. I'm like, am I the only one here that likes this company? I'm like, well, maybe that's a good thing.
Yeah. Well, now there's two of us because I'm obviously a big fan too. Otherwise, I wouldn't have looked to join. So I'm excited.
Yeah. And I know, and I'm, obviously there's a lot of people that do this Twitter world. We're talking about 10 people or whatever it is that comment on this stuff. Couple things. I am personally fascinated. A big reason why I got to this point of putting my money where it is. I'm a huge cannabis guy. But the beverages are so exciting to me because I partake in cannabis pretty much every day or every other day. And I would much rather have a beverage than do anything else. And I've had some of the products that, Canopy was tied in with at a time. I don't know exactly what's going on, but it was the EBBU or EBU. I'm not sure what you call it. I had that wine. I went to California or Colorado and tried it. And it was amazing. And, I know you guys have announced that beverages are coming sometime soon. Is there a little more that you can dive into on, where you guys are, what the goal is, what that might look like, how someone can get some of these products and when? Is there more color you can shine on that beverage aspect of the strategy?
Yeah, I'll talk a little bit about it. I'm not going to, I want to keep some secrets back so we can surprise and delight the marketplace. But the beverage category is going to be very important. If you look at the cannabis user today, it's more of a traditional recreational user. We're not broadening the category as much as we would like. That's only going to happen as it becomes more acceptable and used in social settings. And if you look at today's social settings, what does that lead you to? It's low dose beverages where you can have, you're having a glass of wine, you're having a hard seltzer, you're having a beer. That's going to be an important area of growth for the cannabis industry. So we're looking at beverages, as are a lot of other players. The appeal isn't to the traditional user that's buying flower or buying. The appeal is to a new user that wants to use cannabis in more of a social setting, more of a low dose, so it can supplant things like alcohol. There's a tremendous amount of benefits: lower calorie content, no hangovers, more health conscious. Because of the natural ingredients that are involved. So there's a number of benefits to it that, if it's done right, can appeal to a consumer. So that's the reason we want to launch and learn from a beverage product. Ultimately, though, it's going to come down to taste. It's got to taste good. It's got to be an enjoyable experience, or people aren't going to make a switch from wine or seltzers or other categories. So that's what's taking us a while. We want to make sure we get the right taste profile so the consumers will try it and say, hey, I like this. I like the benefits. I'm going to make a switch. And, you only get one chance to make a first impression. So we're being very careful, and we're working very closely with Canopy because they've got a ton of experience in this area to make sure that we've got the right product launch. As we said, it's going to be this summer. It's going to be in California because that's where the market's leading. And we will use that as a springboard to learn more so that we can roll it out across all of our operations as we move forward.
That's great, man.
Exciting though.
Yeah, it's very exciting. I can't wait. I'm going to, as soon as you're able to buy one of those beverages, I'm going to be there shortly after to buy one and taste it.
Yeah. It's interesting because I'm a Canadian. I live in Canada where Canopy has a presence and has products. So I'm one of the unique people in the organization that gets to sample some of their current products in the marketplace because they're not available in the US yet. Apart from the CBD products. So it's we're working forward with them, but we know it's all about taste.
Yeah. Well, if you can't answer this, just let me know. But like, is it going to be similar? Like, is it going to be the same beverages that Canopy already has, or is it going to be a totally new beverage? Like,
The starting point is always what Canopy's developed, because they've products are in the Canadian market. The taste profiles and the demands and the requirements in the US market may be the same or may be different. That's why we've got to undergo the development, product sampling, and consumer sampling to make sure we've got the right profile for the US market. It may be the same, it might not be the same, to be determined.
Gotcha. Yeah, and obviously I'm a big fan of Canopy as well. I'm trying to have this merger happen and then ride the wave with Canopy for the future. And they've got their BioSteel products. I know you said you're a big hockey guy. BioSteel seems to have come from the hockey space and had a big appeal. I can go buy them down the street for me, which is really cool. And I do buy them. And so I love the overall strategy of the ultimate picture. And it's like Canopy and Acreage eventually are slowly making their way into my house through BioSteel, through the CBD, through my Volcano, Martha Stewart products. Like, I just feel like, in my opinion, there's a chess game that's being played by Canopy, and all these other companies are like, yeah, we're the better players, we're making more revenue, whatever. And I'm like, Canopy is the ultimate king of this space, which maybe is Constellation, who knows? But that's what I'm betting on.
You got to play. No one's playing the short game here. Everybody's playing the long game. It's not about what it looks like next year. It's 5 years from now when this category continues to develop. And Canopy's an excellent partner for us there. They've devoted more time and effort into product innovation, research than anybody else in the category. So, they know what works. They've got more things in the pipeline than anybody else, which positions them for great success long term. So we're excited to be associated with them. We're learning and we're leveraging wherever possible.
Sure. So moving forward, strategy is to dial in on these 9 or 13 states that are the most important, big opportunities with where you're positioned as far as licensing in New Jersey, New York, Ohio. Buying that existing partner in Ohio. What's the thought process there? Is like, let's just, because I know that you have somewhat of a operations there, but they're opening up where it's really going to open up the sales, like you said, at the end of this year, beginning of next year for New York, New Jersey. And you guys, from my perspective, you're as big as anybody there, or close to it, as far as what capacity and what you have the ability to capitalize on with the licenses and the amount of stores and all that. Can you maybe touch on a little bit about that?
Yeah, I look at some of the markets. We were a little bit late to the party in Massachusetts. We're a little bit late to the party in Illinois, where we've got a good presence, but some others have really come to, be large players in those states. Same with Florida. That's one of the reasons we got out of Florida. New Jersey is a different example. We've got a good footprint before adult rec comes in, so we're extremely well positioned. We think we're the leader in that state, and we're not willing to give it up. So, we're focused on New Jersey. It's going to be a very important asset for us. And that just leads into the same thing happening in New York. Obviously it's right, location-wise, right beside it. Again, it's another market where, unlike Illinois or Mass, we're well positioned before adult rec comes in. And so we're going to take advantage of that and use that to establish a leadership position and maintain it. All the markets are important for us. Those two are key. Yeah.
And I know you get a couple really good locations retail wise in New Jersey, already.
The principal one is we've got a location on the Atlantic City Boardwalk. It will do well under the current medicinal program when things open up coming out of the pandemic. But when adult use comes, it's ideally located. That's where the people are going to be. That's where the tourists are going to be. That's where a large potential sales volume is coming from. So we're extremely excited about that location.
Are you able to grow that specific one in size, like take over additional retail locations that are next door to it and stuff like that? Or any thoughts on how that's going to play out as the demand really ramps up?
I haven't looked at it yet. You know, the location we've got has enough square footage to satisfy the initial demand that we're expecting. You know, if we get very strong growth, obviously looking to expand it is always on the table.
Right. Very cool.
Yeah.
Well, cool, man. I mean, that's about as much as I had as far as diving in and questions. Is there anything else that you think would be important or that you would like to touch on for our listeners, or as far as getting the story about Acreage out there to the public?
No, I think you touched on it. You know, there's a lot of misconceptions about the company because of what happened in the past. The company has refocused. We now have a strategy that we think makes sense and will allow us to win in the market. People don't yet understand that, you know, so it's my responsibility to get out and start telling the story, just like I'm doing here. I think it's a great story. I think it resonates very well, and the strategy's on point. So, you know, the future for us is extremely exciting. I'm looking forward to the ride, and I see great things.
Yeah, me too. Well, I appreciate your time, and if there's any way I can ever add value, just please keep me in mind. I really respect that you came on here and did this. And, you know, obviously we're in Texas, so not a lot happening here on the cannabis front, but maybe one day. And
you never know.
Maybe one day I'll help you guys get some, you know, license or dispensaries, or who knows.
Yeah. Cool. Well, it was great talking to you. Great seeing you again too.
Yeah, man. You too. Hope you have a great weekend, and we'll get this content out pretty quickly. And, one day, my thought is people are going to say, you were right, Matt. This was a great opportunity.
I think you're right. I completely agree with your thesis, because that's why I'm here.
Yeah. Well, I'm glad you're leading the charge with Peter. Very excited, you know, see what happens next quarter. And thanks again, man. Hope you have a great rest of the day.
Yeah, you too. Thank you very much. Take care.